Good morning, everybody. Happy Thursday. Welcome to PreMarket Prep. Spencer Israel, Joel Elconin. Dennis Dick is here today. I can confirm he is here today. He has power. It was an adventure. He got it back. He will tell us all about it, I'm sure. So I feel like he feels like he needs to make up for yesterday. He's got a lot of words to say today. So we got a lot to discuss. We got Amazon, obviously. We're going to talk about Amazon. First stock split since 1999. Hey, credit to Charlie Gasparino. The man was not wrong. He was just 11 months early. Props, Charlie G. We're going to talk about inflation today. CPI out at 8:30. Don't forget about that. We're going to talk about earnings. Asana, Crowdstrike. We would talk crypto, giving back its gains from yesterday. And surprise guest today. I could tell you who the guest is. Maybe I should tell you who the guest is, it'd be more fun if I just didn't tell you. If we just waited, or unless it says it on the screen there, it might say it on the screen. In this, whatever, it gave it away. Jason Raznick is supposed to be joining us today, I hope, at 8:35 after CPI. Jason Raznick, founder and CEO of Benzinga. You've been asking to get him on. I've been trying to get him on. I think today's that day. So do us all a favor, smash that like button, and here we go. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. All right, the gang's all here. Let's get Joel's charts up on the screen. Joel, what's the word?
Red here, Spencer. My 47.5 handles at 42.28. We're talking March for 2 days, folks. The rollover was yesterday, so your volume will be split between the June and the March. Crude rebounding up 387 at 112.58. Gold rebounding too. That's up 24 bucks at 2012. Silver, that's in the green by 31 cents at 26.13. Bitcoin, easy come, easy go, down 2,600 bucks at 39,320. Ethereum futures, they're down to 85 bucks at 26,0150. So, Triple D, good morning. We missed you yesterday. You had quite the adventuresome day yesterday, huh?
Yeah, it was one of those mornings, and I had a lot of positions on. I think I had 100 overnight positions on. So it was one of those mornings you just don't want to lose the power. So story trading happily about 7:45. Power starts flickering, but it's not going right off. It's just flickering. But then it's like coming off and on and off and on. And I'm like, okay, I got to like shut down all my computers. I'm going to get wrecked from the surges. So I'm shutting everything off and then I'm obviously going to deal with the power situation. So first thing is I actually call Bright Trading to cancel my orders because I don't want any orders sitting out there. So now I'm obviously still in 100 positions, but I'm somewhat hedged. So then I call you guys, say, look, my power just went off. I'm probably not going to get back on to be able to do the show, and I got to deal with all these positions here now. So I'm scrambling. So anyway, I'm just trying to get organized. I'm trying to figure out what I'm going to do. I'm assuming the power is going to come back on very quickly because I'm in a small town and it's winter time and power just doesn't come back on in 20 minutes. And I'm like, okay, I'm an hour and a half before the open. I want to get power before. So I go outside just to look and I smell something. I'm like, oh my goodness, this is not good. You never want your power to be off and then you smell something like burnt outside. I'm like, and then I go, okay, I'm going to go look at the neighbors. Look at the neighbors. He's got power. Next door neighbor has power. I'm like, this is not good. This means it's me. It's not like, somebody said a telephone pole down the street. This is me. So anyways, have my wife call the power company and I'm like thinking my power could be off for a while here. So I go actually to Laura's cousin lives about a half mile from my house. call her up. She's teacher. She's in school. Can I go to your house and literally trade at your house? And she's like, yeah, no problem. So I was going to bring my laptop. I'm like, screw it. I actually grabbed my trading PC, the monitor, everything. I set up a workstation in her house.
So you just ripped your computer out of the wall.
Yeah, I threw the camera, like the video camera for this show. It's gone. Don't need that. Need the keyboard, need the mouse, need the monitor, need the Ethernet cord, because I'm going to plug into, I'm not going to go Wi-Fi, I'm going to plug right into a router, and need my PC. Throw it all in a box, drive over there, get it all set up from her guest bedroom, and I'm back online literally at 8:55. I was back online. So I had an hour and 20. I go on there, and the market hadn't moved too much. We had rallied a little bit there. Trade out all my positions, and obviously the last 30 minutes of the pre-market, and then I get out, and it all ended up working out from a trading perspective. But I missed you guys on the show. Come back, now I got to deal with the power situation. So what happened was the line from the box at the road to my panel to where my meter is, somehow that line burnt out. So, and that line, and that's what I was smelling. So it was actually my own line. So what they did was they ran me a temporary line. They jumped off the neighbor's house, ran me a temporary one, and they're coming back today to dig in the new one. So hopefully they don't screw stuff up when they come in to dig me the actual line that's going to go underground. So that was my story. Lots of fun. I had 25 people reach out to me. Why don't you get a generator? They don't know my backstory then, because everybody knows I've been building a house for the last year. I'm literally in a rental right now because I'm waiting for my house to be built.
Which is, so, it's almost done, right?
The projected move-in date is June 30th, like July 1st. Moving in for July 1st, Canada Day. Projected, and we're on targets. I mean, COVID has made the process a little slower, but we're on target. So July 1st. And yes, I will have a generator in my new house. Bought a nice brand new $14,000 Generac. Whoa. So I know 14 grand Canadian money. So it's like 5. No, just kidding.
And you know what you said? I talked to you after that, and you said you were going to take it and bring in another monitor, but you said you didn't need the news, right?
Not when you're trading out of stuff. I'm in crisis mode. I'm not trying to put on.
I know.
I'm
but
trying
you said,
not to get murdered in the
but when you
trades
said
that I
I'm
have.
like, yeah.
So
okay.
I literally, I trade on one screen. I got news on the other two, basically. News, and information, and then trading. I just need to trade out of what I have. Let's get out of crisis mode, get out of my overnight, get out of my day trades, not my long-term stuff, get out of my day trades and get flat. And then, I can deal with this power thing. But first things first, I got, 100 positions on. There's a lot of money floating out there. I need to get hedged, or I need to be not only hedged, but I need to get out of all these stocks. So got out. It all worked out okay. Power is back on again. I hope it doesn't go out during the show here, because apparently they're coming in today. I don't know what time they're coming to dig in the new line. So hopefully they don't dig it out in the new show here.
If we lose you, we know why. Let's go to Amazon here, guys. Story of the night yesterday. This had been rumored since as far back as last April, when Charlie Gasparino from Fox Business reported that stocks that was, quote, imminent. Turns out he was early, but he wasn't wrong, because last night after hours, Amazon announces, yep, we are doing a 20-for-1 stock split, or we're also going to do a $10 billion buyback while we're at it. Record date is May 27th. Split adjusted date is going to be June 6th. There we go. It's party like it's 1999, because that was when their last stock split was. Wow. September of 99. It's been 13 long years.
And I just want to say, wow, I was looking last night and I'm like, all of a sudden my filter just lights up Amazon. So I have scanners that are looking for certain, obviously, movers, and it'll just light up because it's like buy after buy after buy after buy lifting. And there's news. I'm like, what's the news on Amazon? And then in the Benzinga Pro, you can bring it up if you want. You can see a little general corporate statement press release, and that's what they hit with the PR. So that came out, and if you wanted to show it on the Pro, you can. You have to have press releases checked, but obviously everybody's got to go in there and read it. The algos just can read it instantly, so they're buying off of it. So you click it, you look in there, you're like, oh, I see a buyback. Oh, I see a stock split. Oh, that's why we're already up 100 points, and then we're up 200 points, and then we're up 300 points. Literally went up 3,100. It went up over 300 points. And I'm like, this is pure stupidity, is what I said to myself. Pure stupidity. I'm trying to frantically get into my long-term account, which I have my Amazon, my long-term account, to sell it. Because I'm like, up 300 is pure stupidity in this market. So I'm like frantically logging in, because I'm not even logged into my long-term account. I'm in my day trading account, going into my long-term account. Bring up the browser, log in, give your credentials. Come on. It's only up 250 now. Like, come on. And then it's up only 200. I'm like, come on. I'm like, click. I'm like, it's only up 200 now. I'm like, oh, do I sell it? It was just up 300. I'm like, yes, I sell it, because up 200 is still stupid too. So I turned around and sold my long-term Amazon out of there.
Yeah.
I was thinking about it the other day, and it wasn't like one of these ones that I was up an enormous amount of money on. It was one that I bought. I bought Amazon right back in April of 2020 near the bottom, because I had decided that the COVID thing, obviously, everybody's going to online shopping. Yeah, and I bought a double-sized position back then. I bought half for a trade and half for a long-term investment. Sold the trade portion, kept the long-term investment portion for the last year and a half. Sold half of the long-term investment portion when I had the good earnings report in February, because I felt that was like just overdone, went up 400 points on the report. That turned out to be a good selling opportunity. And then it's been leaking. I was saying the other day, I was like, why didn't I sell it all? And then the gift from the gods last night, I'm like, okay, I am actually selling my Amazon here now. So I sold my long-term Amazon. It's gone. I am flat Amazon. I don't think the war is over.
It's funny because I stepped away and I came back, and I like to look who was the biggest for the pre-market prep plus daily update. I do the biggest gainer in the S&P, the top 11 components, and then the biggest loser. And I'm looking, and I'm like, no, Amazon wasn't. Like immediately when I looked at it, I didn't even have to go to pro. I knew they split the stock.
Yep.
I mean, you didn't even have to go to pro to get that kind of move. I don't blame you, Dennis. And you sold the other half when they had that ridiculous earnings pop.
Yeah,
remember
I sold
this?
half then, yeah,
Yep.
and that was a good selling opportunity too. I mean, sell the rip continues to work. So.
And the other thing too, if you want to look at this just from a long-term perspective, no position, not taking a position in Amazon, but you had this trading range, right?
Mhm.
This nauseating trading range. What, it was like 2,800, 3,500. If you can even make it more defined than that, maybe 3,100 to 3,400. You broke out of the bottom of a monthly trading
doesn't look
range
good.
there. It does not look good.
No.
And there's a lot of air underneath here. Who knows what's going to happen with the war?
I've been looking at that
Yeah.
for the last few weeks and thinking and kicking myself that I didn't sell all of my Amazon when I had that rally at 3,200. And like I said, I feel like it was a gift from the trading gods last night.
Yeah.
Especially went to a 31. I didn't get 31. It was up to 3,100 for less than a minute, I think. It was
Oh yeah,
really
and look
fast.
at your
Algos got
dailies
really
here.
stupid.
Look at your dailies right here.
Yeah.
Look at this. 1, 2, 3, 4, 5 high, not just under 30. Someone was probably targeting 3,100. But look at that. I mean, you got confirmation. I don't know if you're going to, you happen to sell it up there. But if you were thinking of
I
buying
didn't
it
get the
off that
3,100.
news, you just got to look at that 3,100 and say, wow. And we just traded under 2,700 a couple days ago.
Yeah.
Very unsustainable move. Good job, Triple D.
Well, we don't know. It's no good job yet. People are saying it's mixed reviews. Some people saying great move, other people saying real stupid. And I don't know. One thing I do look at my overall portfolio, and I did some other things yesterday too, which you might say are going to be stupid, but we might as well talk about it. I looked at my overall portfolio. I'm just too heavy tech, man. I'm like, it's just grown that way. It didn't start that way. It just grew that way. I mean, I looked at Apple. Apple's 11% of my long-term portfolio just because it's grown so much. And then I looked at, the Qs. The Qs are 20%. So I literally, between the Qs and Apple, I'm 31% of my long-term portfolio. And then I own Google. And then I own Microsoft. And then I'm like 55, 60% big tech. Like the big five.
Well,
I'm just too big.
That doesn't make you special. That's everyone, man. That doesn't make you special.
Well, yeah, but if it's going to start to come for those, and I've been saying for a while, I think that they could start coming from them. Apple's not cheap. Amazon's definitely not cheap. I just think I wanted to do some reallocation yesterday. So I did basically seven trades over the last 2 days in the long-term portfolio. Told you I sold my Amazon. I sold my Square. Square popped. I actually bought it 2 days ago. I sold it at 125. I sold half of it, and then I let the other half come all the way back down. Then I rebought the half that I sold at like $98 2 days ago, and it just popped up to 112, and I sold. I think I got 112.50 or something yesterday. So I'm like, it's literally up 15% in a day. I'm like, I know what the way this market works. It gives it back. So I'm like, I'm out. I'm just gonna move on and thank the trading or thanks for the bounce. So I was using, and I tweeted yesterday too. I'm like, I'm selling tech into the rally. I sold my win, WYNN. Terrible on this. I bought it perfectly. Did not exit in time. Missed my exit. So I bought it at 78. Ran to 95. Came all the way back down. I missed my exit. I was trying to get it at like 89 on the day after it hit 90, which was the second. And it got up to 88.22, and I didn't get out. I'm like, and then it just literally collapsed in 2 days.
Wow.
And again, because you're not trading it, you're not really watching it much, so I don't notice it until like it's not like I'm sitting here actively trading, my longer term stuff. So, but I wanted to reallocate. So then it got murdered, 90 to 70. I feel like a little 50% retracement of the recent move. So I sold it yesterday at 78, I think. So I'm all out of win. Basically a long-term. End of the story is I basically scratched after all that, but I was happy to scratch it because as of 2 days ago, I was actually down 12% then. So taking a winner to a loser, don't do that. And then I sold Amazon, Win, Square, and I actually looked, and because Apple was 11% of my long-term portfolio, I ate, and I sold 25% of my Apple as well. That's how much I don't like Apple right now. Is I was willing to eat a 550% gainer and pay some tax on it, which, sometimes you just have to do it. But I just felt like, I feel like it could be one that could end up coming back down to like a 120 area eventually. So I'm not selling it all. I'm just trying to get not so tech heavy. And this was a good opportunity to rebalance my portfolio to a certain extent. So with the money, I didn't stay in cash. I actually went and I bought Halliburton, which is something I wouldn't have thought I would buy, but I don't think the war is over. I bought it at $34 yesterday. I bought CCJ the day before. Guy Adami, fast money. I'll give you props because you called this one out, and you were like, this is obviously CCJ is anyways, CCJ. Guy Adami calls it out.
Okay.
And I kind of agreed with his whole thesis, and I picked it up at like 24.5 a couple days ago. It's 27.5, so it's doing pretty good. So I want to give Guy Adami some props on that. And then I bought Wheat, WEAT, just as a trade. So that's more of a swing trade, but I feel like it just went from 8 to 13 and back down to 10. I was like, I don't think we're out of the woods here on the Russia situation. So I did some reallocation.
I don't know if you're going to be right or wrong, but we have talked about how nothing stays in favor forever. Tech is coming off a decade in which they crushed it. Big tech specifically crushed it in the last decade. Amazon, Google, Microsoft, Apple, et cetera, et cetera. Nothing works all the time. Nothing works forever. I can see a scenario where tech takes a back seat for a few years. You mentioned Amazon doing nothing.
That's what I'm worried about.
For the last year and a half. I don't know if you're going to be right or wrong. I'm not willing to go as far as you and sell a lot of. I'm overweight tech too, frankly, and I'm not willing to go as far as you. But
but let's stop. I'm still way overweight tech.
Okay.
So I was analyzing, it was probably 55 or maybe even 60% of my long portfolio. Probably yesterday's moves brought me down to 50. I mean, it didn't help. I can't bring it down to like 20 or 30 because I just don't want to pay the tax bill. I'm sitting on like Google. I'm up 1,000% in Google. I can't sell that. I mean, Apple, I couldn't bring myself to sell the whole thing. I'd love to sell the whole thing. If I was up nothing in Apple, I would sell the whole thing right now. But I can't because I'm going to realize a huge dang tax bill. So I don't want to eat that. So Qs, I'm up. My average cost basis on my QQQ, my average cost base on my QQQ is $39. It's $329. I'm like, that's just because I've been buying it over the years. I bought it 20 years ago. So I'm like, literally, how do you sell that? You want to realize 1,000% gainer? Do you think that this is going down 30, 40%? I mean, that's what you're basically saying if you sell that. I don't know if that's the case. So all I was trying to do was Amazon was only up like 18% in or 20% in. So I'm like, that's not a big gainer to eat. I've sold all my big gainers. I've sold all my, everything that I could sell. Now I'm stuck with the stocks I'm just up too much in. And anything in a registered account is fine. You know, I can sell out of a registered account. Maybe we should get into the tax question. You know, I know we got CPI coming up, but you had a tax question there too. But, you know, it's always a balancing act in analyzing the tax situation. In Canada, you have what's called an RSP. You have IRA in the US, but we have an RSP. Anything I do in my RSP, I don't have taxes on, so it doesn't matter. And I have some stocks in there, and I would actively trade out of those and sell those. It doesn't matter. But I have a huge chunk of money that's in a retirement account that isn't registered. That means it's like taxable. You know, it's just in a regular trading account. People will say, why do you do that? Well, you can only contribute so much to an RSP every year. So I have a huge amount of money that, you know, I've made over trading that I can't have in an RSP. I can only contribute the maximum, I think, is $28,000 a year. So I've got, you know, all this money sitting outside an RSP too. This stuff that's the Apple and some of these big ones are outside a registered account, meaning that, you know, you are going to be taxed on that if you sell it, like taxed immediately. So there's always that balancing act. I mean, if you're just actively trading your IRA or your RSP, it's a different situation. You know, you don't have to worry about the tax as much, like paying the initial tax bill. But every time I sell something in my long-term account that isn't in my registered account, I got a tax bill coming at me right away. All right. So you've got to consider all that stuff.
What we're going to do, we'll do it before tax day, obviously. We're going to get a tax specialist on the show and talk about this. Someone who actually knows a lot more about this than the three of us to talk about tax.
I feel like I could talk tax for you for a minute if you want. I mean, it's fairly simple in trading. I mean, you have in Canada and the US, you have two different things. Canada has, and we'll bring a tax specialist on, but I'll give you like 2 minutes to talk about it.
Okay.
The IRS in the US, you got long-term capital gains. So after you hold something for over a year, the tax rate drops substantially there, and I believe it's down to 15%. I'm not American.
20% is the short-term rate, 15% is the long-term rate.
20% is the short-term rate?
Yeah.
What do you mean? I don't think that's correct.
Wait.
That's wrong. It's taxed regularly.
Oh, no. I'm sorry. You're right. The short-term rate is it goes up to 30. It goes up to 35%.
Yeah, it's your rate. So you get a tax break that I believe only 15%. I mean, this is I should talk to Canadian because I'm Canadian. So Canada's just flat out on capital gains. It's just flat out 50% of the tax. So if you make $100,000 on something, $50,000 of it is taxable. It's just flat out half. Now, again, if you're actively trading though, an account, the CRA would have a pretty good argument that this isn't capital gains all of a sudden. This is like, you know, income. So, I mean, in the long-term account, I'm not actively trading that. So, because I don't want, you know, to CRA to deem this is not, you know, long-term investing. This is, you know, trading. So I have two separate accounts. I got a long-term account and then I got a short-term trading account. The trading account is just 100%. It's income. I'm treating as income. I'm trading too much to like deem this as capital gains. So, and then I have my prop trading account, which obviously is 100% taxed anyway. So that's my situation. But, you know, you've got to talk over but if you trade too much in one account and you claim it all as capital gains, you could have, you know, regulators look at you and say, yeah, that this isn't capital gains. You're not going in this for long-term investing. You're trading this. So this is income. So there's a little bit of that to figure out as well.
We are 5.5 minutes out from CPI, just so everyone knows. So we will cover that at 8:30. I know we didn't really cover a lot of stocks yet today, but we're going to get a tax expert on the show here soon to talk about this more. Just to put a bow on the Amazon conversation, I am surprised, Dennis, that you would buy a lot of these high flyers, right? CCJ, Halliburton. Do you have, like, what is the plan here?
CCJ is not a high flyer when I bought it. Check it out. Bring up the chart. It's a high flyer now.
High flyer now. Okay.
2 days. Thanks, Guy Adami kickstarted this. But uranium play. I'm like, war is not going away. Guy Adami said it perfectly. It was actually one that I had thought about, and then he said it. I'm like, he's right here. He's like, this is sleepy. It was literally trading at $24, and it hadn't even really moved up much. I mean, if you're thinking the war is going to continue, uranium could get hot. So this is why, you know, I bought CCJ in this longer term account / you know, but with a time like not that, you know, if the war all of a sudden gets fixed, I'll turn around and sell it. I just think, you know, in war times, it's not a bad stock to own. And it wasn't like I was like, this went from 25 to 35 and I'm buying at 35. I hadn't even run yet. So I'm like, I felt like I was early on this trade. So I bought at 24. I bought it in the Canadian price, but I think it was like 24.25 equivalent, maybe 24.30, just literally 2 days ago. And you can see then it went to 26 and yesterday almost went to 28. So it's just been a good one so far. Again, thanks, Guy Adami. He's the one that shouted out and gave me the trading idea. I was like, I agree with that. So I didn't chase that one. I didn't chase Halliburton. I don't chase, and people are saying you're chasing. Well, Halliburton went from, you know, it was sitting here in
back
consolidation
yesterday,
station
It-
from 30 to 32 for the better part of a month, and we're entering a war. Runs to 39 in 2 days, and then gives it all back. I'm like, well, that's just stupid. War isn't over. So I bought a 34 yesterday and at the bottom, but I bought it at 34 and it's 35 today, so I'm up $1 in it so far. But I'm like, I think it could re-challenge those highs. So not chasing there either.
What would be the plan here, though? Like, what would be the
war? If the war escalates, it's going to make money. If the war de-escalates, it's going to lose money. If we go into a situation where they sign a deal, I'll sell it. So like literally, like quickly sell it as quick as I possibly can. So right now the plan is just to get some more exposure here too, like not to be in so much tech. So
yep.
the plan, and wheat is a total trade. Because you got a contango issue here. Obviously, this is a futures. They're holding futures and rolling them all the time. So I don't want to hold this in my long-term portfolio forever. But I just feel like it went from 8 to like almost 13 and back down to 10 in 2 days. I'm like, this is a dip. This is a dip to buy in a stock that's trending up. So this is a swing trade. So and it's an ETF, and obviously it's wheat. But I don't think, the war is going away. I'm betting on that we're probably going to continue to have issues coming out of Ukraine. That's all.
Okay. All right. We've only covered like 1 or 2 stocks today. Let's do like one earnings report quickly. I know we've gone a little bit out of order here. Let's just do like Asana real fast, because that was the big report from my eyes last night. I guess there was 2, Asana and CrowdStrike. Asana's earnings, I don't know how much they matter because the stock is good. I mean, it's growth, and it's got the underlying bit of the CEO buying all the shares out there. But the earnings per share came in a few cents higher. The revenue came in a few $1 million higher. The EPS guidance that they gave missed. The sales guidance that they gave came in higher. I don't know. I mean, it's a growth. It's a growth.
I don't know either. The CEO has just been dead wrong on this call. He's been buying it nonstop for like the last year, and it continues to go lower. So very convicted in his company. I love to see that. I love to see a CEO and insider keep buying and buying and buying, because it makes me, he's putting his money where his mouth is. So I love that. I mean, this guy has just been wrong though. Stock just keeps going lower and lower and lower.
He was right all the way up last summer.
Well, I guess he just kept buying it. I guess he just keeps buying it. What's he bought in the last year?
$1.2 billion in the last
1.2 billion. This isn't like, I'm putting 100 million or something, or even like 10 million. It's like, guys put $1 billion in the stock. So putting his money where his mouth is, running a company, I loved seeing that. But man, the stock has went full. It's given it all back. I mean, we had a huge run in 2020. Jason Raznick, which is going to be on in 7 minutes. Great call by this. He was in this one for a while. 25 to 140. Now it's all the way back to 35. I mean, it's all coming all the way back to 25. Sure looks like it. I know. At a certain point in time, it's probably a buy, but holy.
Dennis, let's just real quick. You got it's
CPI. I just
8:29
cancel
here.
all my orders.
Yep. You got someone nibbling here around 36. The only thing I can tell you is that your June 21 low was 35.26. So they're stepping out a little bit early. Look at that. I mean, I wouldn't want to be shorting it in the hole. But that we'll see what happens in that area. 35.26. Spencer, you got a preview of the number there?
I do. Anything around 8% would be
8%
would be expected. Okay, I've seen estimates as low as 7.8 and as high as like 8.2. So anything in the high 7%, low 8% range is quote unquote expected for right now. And again, we're talking about February CPI compared to February of last year.
Gosh, I got a bad feeling it's going to be
hard to say.
If you take out food and energy and just talk core CPI, we're talking only a 6.5% increase year over year. Recall that the last reading from January came in a little bit hot. Remember, it was a 7.5.
Must be soft. It must be a little bit soft area. Yep, they're rallying it. Must came in under.
I wasn't even. Oh my God, I wasn't even looking at my screens because I was too busy reading off my expectation here. So 7.9%. So okay, that's within the realm of expectation.
That's good news.
Right?
Inflation's running on their rigged numbers 7.5% or
7.9%. So
that's good news. Wow.
Yeah, and that's That's what I mean. We also
That's the good news.
jobless claims. I don't know if you care about that. Jobless claims are out, but and that monthly increase. I didn't even get to say that yet. But the 0.8% increase that we just had month over month, that's exactly in line with where the estimate was. So either you believe the estimates and you believe the number, or you don't. But that's what we have here. We have a number that came in pretty much in line with what the economy, what the banks and the economists were projecting it to do. And that's where we're at. If you take out gas and this is interesting though. Energy up 3.5% year over year. Year over year, just energy by itself up 3.5% year over year. That's very interesting because the conflict didn't start till the end of the month. I was wondering how that was going to factor.
I'll be back 1 minute. 1 minute.
Yeah. Now I looked at the futures got a pop, but they didn't move the stock. So this is kind of similar to that situation that we had, I believe, off the jobs number. We'll see if the stocks should catch a bid here. We didn't get back. Did get back half of the previous 50% of the range for today. So I would have liked to see us get closer to 4250. Kind of a benign number. So this is probably going to give a little bit reinforcement to the quarter point, which Powell already said he was going to do, right? He was gonna go a quarter instead of a half.
I would presume. I don't think this number really changes anything for next week.
I don't think so either.
Yeah. So quarter point is going to happen. Yeah, we're at like they're saying 96% chance of a quarter point hike, little under 4% chance of a half point hike next week, but that's probably not gonna happen. So anyway, yeah, everything pretty much in line. That is interesting. So as I was saying before the number hit, last month's number did come in a little hotter than estimates. It was a 7.5% versus 7.3% number. That was for January. This number pretty much on the button with the estimate. So again, it comes down to whether you believe it or not. Inflation is highly personal. We all see it differently in our day-to-day lives, but that's what the CPI survey says. 7.9%, 7.8%.
Just think about their 2% mandate and where this started from, and it was going to be transitory, and it's running a little bit hot. I mean, the Fed has epically failed. They have done such a poor job at managing this, and they've put themselves in such a bad situation that I don't know how they get it under control.
That's his alarm going off for crazy trades.
Yeah, 1 sec.
So no, but it's a good point to bring up because we went from the Fed having a mandate that we want inflation to stay within 2% to, well, we're not going to be a slave to the 2% number anymore. It's okay if inflation tracks above 2%. We'll keep an eye on it, but we're not gonna mandate and create policy around keeping inflation at 2%. So now, and when was that? Was that a year ago? I don't even remember when that was anymore. Maybe 2 years ago. Now, time flies when you're having fun. So we've gone from a decade or so of 2% inflation to 8% inflation, highest in 40 years. It's pretty remarkable stuff.
Well, the market's liking it right now, right? All things considered. So you got a nice rally going on. We'll see. Looks like we're gonna get back half of this move. Half of the move would be right at this 4250 area. So look at that. If they can set sales and hit 4250 and clear that, then why the heck not go back up and test the close at 75 and a quarter? But boy, you got a lot of air in here. It doesn't look like you could still have an inside day here, but that's what I'm looking at. See if we can get back half of this move. Banks are not really reacting to this. I've been looking at JP Morgan. I've hardly seen that trade. So it's just kind of the futures doing their own thing. I don't think people are making a lot of moves.
I don't actually
a lot of moves in the stocks
here. I
here.
don't actually see any movement. I'm looking at tech and the banks, and I don't actually see a lot of movement out there.
Yeah.
So, Microsoft popped on it. What else? Nvidia a little bit.
It's almost like people, like they did get a lift in the futures, but it's almost as like there's offers out there. That okay, this is a pop. We had a nice day yesterday. We gave a lot back overnight, and here's a little bit of pop. And it seems like there's some aggressive algos bidding up the futures. But to me, it just seems like the stocks are just like, well, yeah, it's not a bad number, or we're not worse than expected, but it just kind of feels like they're just like there's just offers out there.
Yeah.
It's just like not your 2020, your 2021 euphoria. But
Yeah.
we'll see. We got a while until the open.
Yeah, Boris summed it up. Everyone is pleased with high CPI. All right. Y'all have been asking, you've been asking repeatedly, when is Jason coming back? When is Jason coming back? And I've been saying, I don't know, I'm working on it. Well, I worked on it, all right? And here he is, Jason Raznick, the founder and CEO of Benzinga, joining us on PreMarket Prep for the first time in a hot second here. Jason, good morning.
What up? What up, Spencer Israel? Good morning to you, Joel and Dennis. It's up. I know Dennis is on a phone call making some trades.
I don't know where Dennis is right now, but
I'm playing football. See, look, football. We got an Eli. Whoa, we got an Eli Manning, Peyton Manning signed Super Bowl football here. Who should we give this away to?
we're giving that away. Is that what's happening?
Owner. What?
We're giving that away. Is that what's happening?
It's also signed by an Atlanta Falcons owner. So it would help if your name is Josh, because it said Josh. Good.
Yeah, I was gonna say, would Josh be too happy if he gave that away?
It would be okay, Joel, because look, you guys one that has way more signatures. You get rid of one, you won't know the freaking difference.
Jason, how are you seeing inflation in your life right now? We were just talking about CPI for February. It came in at 8%, give or take. So, are you seeing that in your life?
Well, I went to a Michigan golf show this weekend looking for AstroTurf for the backyard.
Yeah.
And the AstroTurf, went up year over year because the glue is more expensive.
The blue?
So, glue.
Oh, the glue.
The AstroTurfing, wait, what is that noise? Oh, I know. It's another thing. I got to turn the audio off.
Okay.
Now we're good. Okay, I can hear you guys now.
Right.
So I will give some Super Bowl shit out. I have a lot of other footballs too that we got autographs on. Hope you guys have been well. It's inflation is making a difference. I was of the camp that the Fed is just slow. I thought they should have raised rates 2 quarters ago, 3 quarters ago, and now they even talk about not raising rates at all. So like who knows what is going on? I see 1,700 people in here, only 270 likes. I mean, come on, can we get to like 350,
Nice,
400
Jason.
likes?
Very
It's
good.
like it's
Very good.
crazy. We put better graphics up, the whole thing. We're gonna talk about some stock picks. We're gonna talk about where I'm losing money, where I'm not. But I don't get the Fed. Sometimes like I feel like I should run for president or run for Fed president. It's like, this guy, Andrew Yang, who made it pretty far. I knew Andrew Yang when he was just starting his business, VFA. So I met him in an alley in Detroit like 8 years ago. No one really knew who he was. I knew him. I'm telling you, if he got as far as he did, I think I can get it. I think I can at least get to the seat. I would run on a fiscally conservative policy and liberally social liberal, so for social issues. But that's what I would do. It's crazy. I don't know. I don't know what's going on.
What about stocks here? You said you've been making money and losing money.
Yeah.
So tell us a little bit about that.
Yep. So Spencer, we had a guest on yesterday. One of the ones I put in a decent amount of money. It's up 7%. Arena Pharmaceuticals. It's a Pfizer acquisition play.
Yep.
Bought it at 93. It's now at 99. As the deal looks like it's closer to getting done. Before we get to another stock, Joel, Dennis, you guys, this goes about a year ago. You guys were talking to me about stablecoin, right? Remember stablecoin, and you didn't want to do it or do it. Joel Elconin, I have a question for you.
Oh boy.
Did you ever put any money in the USDC stablecoin?
No, I did not.
Well, I have.
What has it done? What's it doing?
Nothing. Just stay. I get my interest checks. I have.
Yeah, but the only thing is, it's 6 or 7% now. We're not even keeping up with inflation at that point in time because inflation's running 7.9. No, I'm just curious. Like, obviously, stablecoin's been awesome to keep getting that 7% interest, but now that it's a 7.9% environment, is it still a good investment? That's what I'm asking you.
Yeah, I understand. I mean, I don't know. You may be living in the nickel or 1970s. I don't know where 7%. I get 10%. I get 10%.
And your stablecoin?
I get, what do you say?
And stablecoin, you get 10%?
Yeah, I get 10%.
Oh, so you're beating inflation. That's unbelievable. That's
It's
unbelievable, 10%.
Well, what's unbelievable, Dennis, is seeing the interest monthly. Now, I did pull some money out because my brother woke up in like sweats 2 nights in a row. It's like, what the F are you doing in this stablecoin thing? Even though I think it's fully secure, and I actually like that the government is regulating crypto. So I get 10%. I get it through Voyager because I bought $20,000 worth of their VGX, their Voyager coin. So on that Voyager coin though, it's down like 40%, Dennis. So I'm down 4,000 to 5,000 on the Voyager coin, or a little more, basically.
So you want to be in the stable one, not the Voyager one. That's the story.
Yeah, but the that's correct. But the Voyager one gets you another full interest point. So it depends. It depends how much money you have in there. The Voyager, the coin has been amazing. Now there's companies like BlockFi that had some issues because they were trading like GBTC and going, doing the preferred, and that's actually doing a security versus just lending out the crypto. So I'm a big USDC guy, and I have money there, but I know it doesn't get people excited. So let's talk stocks again.
Well, it does. It does. I mean, in this environment, it's probably a lot better
10%.
than before. 10% a year, it's like, oh, that's crap because the stocks were going up 100% a year. But now, 10% when the stocks are going down, that sounds pretty good, actually.
Oh, I mean, Dennis, it's amazing. When I show the interest I get from Voyager, it's freaking amazing. I'm actually annoyed that my brother woke up in that, and I'm actually annoyed I ever told him, because I would have had a bunch more money in Voyager and I would have a lot more in interest. But that's that. Okay. We're gonna talk about more stocks. So I've been buying this stock, KURA. KURA. Can you pull up a chart, Mr. Israel?
Yeah, I got you.
So, and by the way, I'm cherry picking right now on the stocks that I'm up. We'll go up and then we'll go down. Is that cool?
That's
Sure.
cool.
All right. I don't want to be like a bragger, like I'm up on every stock, which I'm not. So I just want to be honest. So KURA, I don't really know the story a ton, but the reason I bring it up is I always try to bring you stocks that when I hear from smart people in the industry, like this guy's at a hedge fund and he doesn't usually say his picks to his friends. This is one of his favorites. I'm up 20.7% on it. I don't know, or 20.14%. I don't know what his price target is on it, but I own it because this guy who's in it is very, very smart. Its 52-week low is 11, 52-week high is 32. When it hits like 24, I'll probably start selling a little bit of 25. So that's my take on KURA. It's a biotech oncology play. He says it's one of the best ones, and like Pfizer, someone's going to buy it out.
It's doing pretty well in the charts. I mean, from a technical perspective, everything's been getting hammered, but this one's been slowly drifting higher. So you're in a leader here, which, at least from a technical perspective.
I wish for the listeners I could give you the fundamental reason why this is a game-changing one, but I don't know the person. It's just through the grapevine. This is like this one guy that
you trust.
Yes. And so right now I own it, but I'm not going to be greedy. I'm up 20%, which I probably should sell some. I put a decent amount of money in. I'm waiting for to get to like 20 or something, and then I'll like sell 15% of the stake. I told you guys about Arena. The other one that Spencer and I were talking about yesterday, Dennis, is Eli Callaway. So if you pull up a chart on that, not a pretty chart, but what I've done there, Dennis, is dollar cost average. I started buying it, at 28 or 29, maybe it was 30. Yeah. And so when it went to the low of like 20, I bought a bunch. So, so I bought a bunch, Eli. So I'm now down 4% on it. I just can't see this thing not moving back to 30. I really can't. The golf
Seasonal.
demand
It's
is
seasonal, right? I
and you're
mean,
going to come into the good season
yeah.
for golf. Like I love the seasonality play here. Like if you look last April, look at when golf season starts. Kind of starts like April. From April to June, this thing went from 25 to 35, and now you've been straight down. I mean, market effects are going to affect everything. But Jason, I think if you're in the next month starts to warm up here, you're coming into the good time to hold a stock like this. So I like this one.
Yeah. So, but Dennis, I agree with you typically. But what I do on my Saturday nights while you guys are out there partying,
Oh yeah.
I literally call top golfs. I literally call top golfs, and how booked Top Golf is right now is unbelievable. You couldn't get a spot in LA at their 4 Top Golfs. In Detroit, it was a waiting list. You had to wait an hour to get a Top Golf. So I think I really think that Top Golf that they bought is a better buy than they're getting credit for. They may have paid a premium, but I think it does bring some nice recurring income. That Top Golf's an experience. It's fun. I don't know if you guys ever done Top Golf. Have
Never.
you?
I haven't. No, actually.
Joel, have you?
I have not been out there. No, I have not.
Okay. So
Is
I
it
wonder
fun?
what people that don't golf, if they like it. But this Top Golf that they bought is so busy. So part of my thesis, Dennis, was I need to study the financials more, but I wanted to know what these Top Golfs are making, how much more room for expansion is, how much more room there is for expansion. But look at this. I mean, Darren F. Top Golf was wait time. By me in Tampa on Saturday evening was a 4-hour wait. We didn't go. I'm telling you, and then look, Bill, Top Golf is expensive to play. Absolutely, it's expensive to play. It's one of those experiences, and I think the margins are going to be higher. I think you're going to see crazy numbers when they report Top Golf. I really do. So that's one. See, look, there we go. Top Golf's amazing. Went to Dallas a few times. So that's
I also bought this a few weeks ago, but I didn't do nearly as much thought. I bought it because I knew that there's going to be a Netflix documentary about the PGA Tour, and I thought maybe there was a similar effect that the Formula One series had, where it just increased popularity tenfold in the U.S. But I'm definitely have buyer's remorse here. I'm regretting my Callaway. I don't really know what I want to do with it right now, but I bought it.
I mean, I don't.
I bought a 24. I don't. Even
When
know.
is the Netflix documentary coming?
I don't. It might not be for a minute, so I don't even really.
Well, so Dennis or Joel, whoever wants to comment, this is like what Spencer just said is a challenge that you have in the market, because we tend to look at the market daily, and so you lose your conviction sometimes.
Yeah.
So I have strong conviction that like Wynn and Caesars is going to surprise people, and it's going to be like they're going to be huge winners in 2022. So I own a decent amount of Wynn. It's one of I'm down 14% on it. I've been dollar cost averaging a little bit, but I'm down 14%. And so I own Caesars too, guys, and I was only down like 2%. I sold Caesars earlier this week, and then Caesars took off yesterday, like up 10%. I was pissed at myself for selling Caesars. My logic again is Wynn is packed. It's so busy. Everyone I know is going there. I haven't been there, but everyone I know is going there, and it's so busy. I think Wynn is going to explode in a positive way. I think, again, like if you don't think of the day-to-day gyrations, you'll be fine. I think Callaway goes back to 30 or goes above 30. Yeah, they lost Phil Mickelson. Well, they're also not paying his advertising thing. It's probably $10 million a year. So maybe their earnings go up. Who knows in a small thing. So sometimes you have to look away from the screen to really keep your conviction, because
and it's something that active traders struggle with. Like in my long-term portfolio, I find myself even yesterday, here I am trading my long-term portfolio again, and I always do worse. If I just look away and look back, that's how you get those big winners. That's how you get those 200, 300, 500% winners, is not looking at them every day. As an active trader, it's really hard to separate it. Trading and then investing are two different animals. I try not to look at my account, but when you're seeing the markets move around as much as they are, what you own. It's a tough thing to do.
It absolutely, but some of my biggest gainers have been that way. Because I bought Tesla at $15, and there was days when after split up, there was days when it went up, down, and all around. And if I would have watched every day, I would have been screwed. There's other stocks that do you ever buy warrants?
No. No, I have, but I don't actively buy them now.
Okay. So maybe I don't want to bring that up, but then we don't have to. I have people talk about RKT. So I sold some of my I sold RKT at the end of last year for the tax loss.
Okay.
And then bought it back in February because the dividends. And I did that the same thing for UWMC. RKT long term, it's the same position I've said that I don't really change. Like they're in the solar business now. It sounds surprising, but they're closing deals in solar. They bought Truebill. Once they figure out that capital stack of what people are paying, what they have, and when they introduce some new products, RKT will be a fintech company that other companies are rewarded very lofty valuations that RKT could be there. Now, granted, the freaking mortgage profit is going to fall. So if they did 10 billion in profit, they'll do 2 billion in profit. There's no question. But as they diversify and get into these other things, I think it can do well. Same thing on the UWMC. Nice dividend, 10% dividend. Last quarter, it had $280 million profit, and I like the dividend. So if these companies were losing money, then I would say, then I wouldn't be as big of a fan. But they're making money, and yeah, RKT owner owns 90%. They just had a dividend, so the owner got a lot of money from that. But they're both invested to see the stocks go up. They're both invested to see those stocks go up. Yeah, I sold RKT at the end of last year to take the tax loss because I had a decent amount of profits and other stuff, and I wanted to show a loss and get some losses for taxes.
That worked out well because the stock went down actually in the month of January. So you have to wait 30 days, which is the tax show today.
I was going to say you went longer than the watch sale rule is 30 days. So you can buy it back, but if you want to actually get the tax loss, you got to wait a month to buy it.
You got to wait 30 days.
That's why he did it in February, not January.
Yep. Yeah. I waited like 50 days just in case, I didn't know how well they're going to do this stuff. So I waited long. And then, so I'm going to go back to my stable coin. So the warrants, I'm not saying go buy this thing right now, but there's this thing called CND.WS.
Whoa.
That is the, I don't know if it's a SPAC, but that circle that powers USDC, that is CND.WS. When it converts, I think Circle is an amazing company that powers USDC. So that's why I own that warrant, that CND.WS. Doesn't trade much, but when it converts for the stock, I think it'll be a winner because this is what Circle is. SoFi does not pay 1% interest. It does for the first 50,000 in savings, and then it's nothing. I signed up for SoFi. I got, they said
nice.
1%. No, but then I didn't do it because it was a lie. It was just
nice.
No, I mean, it's fine, but it's fine. I wanted to check it. I've been signed up for all these fintech things. So when you talk about alternative assets too, guys, we haven't talked about it. Dennis, I've been signing up for every single alternative asset website because we do on Benzinga, we cover all these alternative assets. What I mean by that is Yield Street, Realty Mogul. I'm trying to find uncorrelated stock market returns for people. And so I'm testing it with my own money, not a ton of money, just my own money just to see, are these real or are they going to say, hey, sorry, we had whatever. Okay. Let's a couple more stocks. Upwork, UPWK. Pull this chart up, guys.
This has been a favorite of yours for a while.
100%. Pull this chart up.
Yep.
Check that out. Joel, are you going to fall off your chair?
No, I mean, I remember you talking about you sold some of it, right?
Yeah, I sold some into the strength, absolutely. But I didn't sell all of it, and I'm definitely down on it. No question about it. I see it right here. So as we think of trades, and you sit back and you're in this room, you think of trades, Upwork, they have 10% of their workforce that's remote workers in Ukraine and Russia. Why didn't I think of okay, that's going to hurt their numbers? I didn't think about it until I listened to the quarterly. But they get 10 to 15% of their business from Ukraine and Russia for the vendors. So Upwork has taken a big hit because of that. I didn't sell it, Joel, during this downdraft. So I sold stuff in the 45, 46 range, but my average cost on this is 28 to 30. So I'm down 30% on my Upwork right now. what I have left, I'm not doing anything on it. I'm just hanging out. So that's
Hey, Raz, since you brought it up, I mean, you've been, you've talked a lot about, the stocks and the sectors and in the Bitcoin, but you know, in your investment experience, right? We're kind of at a pretty unusual time. So how are you, incorporating or you're not incorporating it? Do you just have the blinkers on as far as what's going on in the Ukraine and Russia and this situation? I mean, I know you're younger than me, so you haven't really, I mean, Vietnam, I was pretty young too. It's been pretty docile for the United States.
We haven't seen a lot
Is
of
that
war.
some yeah, yeah. How are you? Are you just, do you have the blinkers on and you just say, "Hey, these are my stocks. This is where I'm going. This is going to pass," or does it, in some ways make you, more conservative? Are you looking at this as just like just another, just buy the dip opportunity, and we'll shrug this off and go back up?
Well, so two things. One is every single time we've had these downdrafts in the market in the last like 3 years, 4 years, every single time it was a buying opportunity. We said, "Oh God, I wish I would have bought this. I wish I would have done this," because you would have like the 10x gains or 5x gains. And I think you get rich or make a lot of money when there is these downdrafts in the market. I mean, it's very hard to time the market, Joel, but it's. I think this is when you do find opportunity. I'll tell you a couple ones that I bought during this downdraft that I'm doing well in, and I still feel very confident in a second. So with what's going on in the Ukraine and Russia, I've taken money off in a decent way, but then I try to pounce on a couple opportunities. And then if I'm really wrong on it, then I reconsider. So I went pretty big into Caesars in the last 2 weeks, and then it was down like Monday a lot, not a lot, like 2%, 3%. I'm like, F it. My thesis is wrong for now, but I'll keep and win. And then it went up 10% the next day. So I try to watch it. I try to watch because there's huge opportunities to find. Like Etsy was a huge opportunity. There's like CrowdStrike. What a no-brainer. I bought some more Twilio. What a no-brainer. Their business hasn't changed. CrowdStrike is going to get bigger and bigger and bigger. So I bought CrowdStrike. So there's I try to think what are good businesses. I would say Asana is a phenomenal business. On stuff when that sells off, I try to buy it. It also helped me realize this stuff is that I'm not diversified enough. So I don't own really that many long-term energy plays, even if it's an ETF. I don't own that. And that made me, that was a mistake. And people are telling me I need to get a money manager. This Goldman guy keeps calling me to manage their money. And I'm like, hey, I know how to do this. But then again, I guess I don't, because I didn't have an energy play, which is just stupid. Right.
We all did that, though. I mean, 90% of investors, I think, have been, long tech, and we've been talking tech, and energy's been dead for so long. It's like you go into what's working, and the energy thing kind of snuck up on us. 6 months ago, just started working, and then it's been unbelievable. So, I mean, I've been way underweight energy too, and I do this for a living. So it's hard to, not knock yourself for, being down on energy when energy's underperformed the market for a decade.
Yeah, that's true. That's true, because you would have gotten killed on it with a debt. Yes, that's true. My friend who has an account, his account was basically all energy for some reason. Let's say the account like a decade ago was like 20,000. It literally went down to like $4,000 his account, and now it's like back at like Schlumberger. He had like at 78. It's still nothing. So two more things I'm going to get to, Joel. I'm going to get to one of these other stocks that I like, but before I do that, someone mentioned the Benzinga Cannabis Conference. I just got word. We didn't put it out publicly yet. On my Instagram, I made a video, but we got word yesterday that Mike Tyson is coming.
Oh my gosh.
Mike Tyson.
Well, that's crazy.
I'm not done yet. Not just him. Now keep this one between us, just us.
That's 2,000 people.
Well, don't. But this is family. This is PreMarket Prep family, right?
Secret safe, yes.
Okay. There's a wrestler. He used to be a wrestler. I guess he goes woo or something.
Ric Flair.
So I didn't say that.
Michigan fan.
I didn't say that because I'm not allowed to say that yet. So I'm not saying that we got him. Maybe we have him, but I don't know. Isaiah Thomas will be there from the Pistons back in the day. Al Harrington, maybe John Sally, and then all the CEOs of every cannabis company. So if you can be in Miami, there's psychedelics the first day, April 19th. the April 21st, bzcannabis.com. The first day I'm interviewing Kevin O'Leary, I think on the 19th or 20th. We'll bring anyone you want there. So you guys come support us. That'll be awesome. bzcannabis.com. Cannabis is actually a hard word to spell. It's CANNABIS.
Get 30% off with the code
That is a hard word to
30. It's
spell.
on the screen. It's in the description. Shows 30 gets you 30%
It's
off.
not on the screen.
It is on the screen.
What screen are you talking about?
Yeah, it's on the show screen.
You better make sure you're looking at the right place.
Oh, not in the chat. Okay, sorry.
Yeah,
Yeah, it's actually right on the screen.
It says it right there.
I know, but I wasn't looking. I was going to check. I had something freaking hilarious to say.
I don't know.
Shoot, hold on. Wait, cannabis, the event. I don't even know. Okay, maybe I'm high. Oh, I interviewed a kid to be like my right hand man yesterday. Trying to hire like a chief of staff or admin, someone that can just help me get going and get stuff built. Anyway, my interview question I always ask people when they say they follow the markets profusely, I ask them Apple stock symbol, and they usually say APPL instead of AAPL. He got that one right. But my next question is, which he got wrong, and Dennis, don't feel like you have to do the answer because you don't want to look, dumb on this one. Warren Buffett. How do you spell Warren Buffett's last name?
Jason, this is
Jason's pet
this
peeve.
might be your number one pet peeve, I think.
I've got it as, oh man, I might get it wrong.
You don't this, Dennis.
Go, Dennis, go for it.
I always is it double F double T or one T? It's double F. Is it one T or two T at the end? My gosh,
I've made this mistake before and gotten
it's hard. Is it double T or is it one T at the end? Joel, do you know?
Double T.
I'm going double T too.
It's double T.
Okay, so we got it right.
But he did BUFFET, and I'm like, and he's like,
you're fired.
but then he's like,
Well, he wasn't hired.
He wasn't hired.
Hey, I gotta hop here. Get ready for Pre-Market Prep Plus. So I'll check in with you guys a little bit. Raz, great seeing you. Hope to see you again.
You gotta
soon.
come on regularly.
See you downtown
all the time.
great seeing you. But then
you totally talked me off the cliff in a lot of these long-term stuff because I'm like, I'm ready to sell everything. Nuclear war is coming. I'm like, I'm selling everything out of this long-term account. But now you talk me out of it again. So it's good. I need somebody. You're like my, counselor here for my long-term portfolio because, I've always done pretty well trading, but I kind of suck at long-term investing because my trading impacts it so much.
Forget it.
So it's hard, man. It's hard to hold. That's the hardest thing.
I hear you, but then what I was gonna say? Well, Buffett, the kid spelled with an E at the end. It was like, what? But
he was really in trouble then.
Yeah.
Threw the E on the
and I liked the kid, but another stock I bought though, Dennis, recently, and it's up 18%.
What?
FXLV. And I bought it against people who are like,
what is this?
I fucking love it. Ooh, Joel.
Wait.
Joel's gone. It's okay.
Okay, look at the insider buying on it and funds. I mean, I bought it in. I didn't buy it in big enough size though, Dennis.
What is this though?
F45.
Yeah.
It's the gym I keep meaning to open. It's like the circuit thing. Mark Wahlberg's involved with it. I freaking love it. And
better than Peloton though.
I'm up on it like 20%. Let me see what I'm up on it. I bought FXLV. Where are we again?
We got to hop because we got Peter Tuchman coming on.
24,000 up 4,800. Maybe I'll do some live trading today. But yeah, Dennis, it's hard in these long-term ones. I get it, man. It's hard when you look at it, but you just got to put some away and leave it alone. And then, hey, do you have a good ETF for energy? I know I got to go because I know that Peter Tuchman.
I just do the XLE and the XOP.
Yeah,
XLE is a little more conservative. XOP is a little more aggressive.
Those are your two largest.
XLE is loaded though. Chevron, like Exxon. XLE is like 40% of it.
So should I buy one of those today?
I bought an energy stock. I bought Halliburton yesterday. So I on the pullback. I don't know long term here because I'm better at the short term stuff. But the day actually was to buy it yesterday. It's already just bounced, to $2 here this morning. And I like energy on I don't think the war is done. So I think short-term energy stocks probably.
You said XLE and what's the other one?
XOP.
Those are the two big ones. OIH is there, but that's all Schlumberger and
if you want clean energy, try TAN or ICLN. ICLN is a clean energy one if that's what you're looking for.
And that stuff's working now too. Because you got solar working, and you've got we're seeing gas prices, so all of a sudden everybody starts thinking, what's alternative energy? So you got solar's been coming back right now. ICLN was probably full of solar, that's clean
Yeah.
energy. So you're seeing that stuff. You're seeing alternative energy work now too because of oil price going high. There's always been a positive correlation.
I got to bring on Peter Tuchman.
We're getting kicked off, Jason.
I'm buying tan right now.
Good luck with that.
Peter, what happened to We'll talk about API later, okay? We'll talk about API later.
Sounds good. All right, see you later, Raz, Dennis. Peter Tuchman, good morning, man. How we doing?
I'm all right, buddy. How are you?
Hey, trying to keep the train on the tracks here. All right, let's talk about reaction to that CPI print. Pretty much in line, right? Nothing too, as much as we can be not surprised about 8% inflation. That's where we seem to be this morning, right? Market seems to be relatively quiet off that.
You know what? I think what's happening is I was trying to figure out what yesterday's rally was all about, and I did a little bit of investigation. And I don't think it was any kind of a dead cat bounce or any kind of a positive reaction to anything. I think it was a massive short cover. I had read about massive put positions that people had. There was a massive put buying going on in the spiders and in the market overall. And I think that there was a massive shorts position in the spider in general. And I think that was a desperate attempt by market makers to position themselves and hedge themselves because there was no more inventory and they were just puking their position. That's what I read. And it sort of made actually a lot of sense. Why, particularly after the way the market traded on Monday, down severely with really a lot of nothing but negative sentiment, would be bouncing yesterday. There was no news out in the marketplace. Besides, look, also this morning I read some fascinating stuff that the massive, last week I think you and I chatted for a second or a couple of weeks ago about who's doing what to who here, right? Is it retail selling? Is it margin call selling? Who's buying? Is large institutions selling and retail buying, or retail selling and institutions buying? And it turns out that what we're seeing is a massive outflow of money out of hedge funds, and retail's trying to buy the dip, right? So that's what's going on. I don't think any of that contributed to yesterday. Mike, I'm convinced that yesterday was a massive short squeeze by market makers in the
a net bearish indicator if the rally was merely the result of, as you're saying, market makers being forced to hedge a massive short position or positions.
Well, look, correct. And it's validated by this morning's action. I don't think the market is reacting to anything, right? We were down 0.25% at 753 this morning.
Yeah, we're
right
down.
Now, was it bouncing back a little bit?
Well, the futures are down a little over 1%. The Nasdaq's down 1.5% here.
Okay, so Spencer, it kind of validates that we have seen these one-off reversal days, no question about it. But yesterday was more than just a reversal day. The market opened up; it was 2.5% at one point, and it flatlined off that all day long. I was in there trading all day. It finally broke at the end of the day, just out of fatigue. But there was being held up by people desperately attempting to hedge themselves, and it's validated by this morning's sell-off. The sentiment hasn't changed. The story hasn't changed. The war is only getting worse, right? Look, we saw a bit of a reversal in the oil thing because it's clear whether we're going to hop into bed with Venezuela, we're going to release our own reserves, whether we're stopping buying oil from Russia. I mean, obviously, as Dennis had mentioned, the oil trade is probably the energy trade's probably still a little in, but I think it's validated by today's continuation of the sell-off that nothing yesterday was a one-off.
That's what we've seen so far. Every pop in the overall market, and there have been several of them, has been a pop to sell, going back really since the start of the year, or even before that. But every time we get a green day like yesterday, I find myself asking, and it was especially difficult the other week too when we had 3 forward up days in a row, all right off that low on February 24th, and I found myself asking, well, is this another pop to sell, or was that it? And you're saying no, not it.
What I'm saying is that we really need to be students of the market. We look, not every dip is the same is like the other dips, right? Those 4 days up in a row, I really think was people thinking, look, we also know historically that are as sort of insensitive as this may sound, that when the in anticipation of a war, the market sells off, and when the bombs start to fall, the market tends to rebound. That's history. That's history. That's not my opinion, right? And so that's what you were talking about.
Yeah.
A reaction to that okay, the anxiety of what is actually going to happen. How is it going to unfold? And we do now know we're in a war and it's going to happen and it's real and it's bad, but the market will react in a positive way. That's history telling us that story. But yesterday felt a little different. And some of these days where we've seen intraday reversals, right? I think those are really a hedge fund selling and retail's trying to buy the dip. But jokingly enough, on Instagram yesterday, I posted a little nursery rhyme and I said, yesterday's dip is not today's dip. Right? You know, you've got people with not a lot of experience. I see it. I hear it on social media of people thinking they're afraid they're going to miss the bottom.
I know.
That is a dangerous psychology to be in, because look, today's bottom the bottom could fall out of the bottom. And Spencer, we've seen that over and over again in the last 8 weeks. In the first 8 weeks of 2022.
I know, because everyone looks at that March 2020 low, and I've done it too. And we can all look at that and say, why didn't I just buy on March 23rd, 2020? And of course, it wasn't obvious then. Peter, I'm wondering, and we gotta hop here, but since you mentioned the wild intraday swings, not so much yesterday, but the day before that and the day before that, what have you seen as far as liquidity in the market? Has liquidity lessened a little bit? Because that can sometimes lead to more volatility intraday.
You know what? I really haven't. I think the volume's been okay. I think the liquidity is there. The outflows, I don't think that's the problem.
Okay.
I think you've got big opinions on both sides, whether it is institutional selling, hedge fund selling, and retail buying, whether it's the other way around. There's a massive appetite for the market right now. We don't know what people's positions are. We don't know what people's risk portfolios are. I know that there are a few people out there getting lucky because they make a bet and the market goes, look, we're seeing multiple days and weeks with more than the 1% move intraday, every day, all the time, right? Somebody's right, somebody's wrong. I imagine we're not hearing from the wrong guys because they're sitting out on the stoop, smoking a Lucky Strike and drinking Hennessy, and the other guys are posting, pictures of their Bugattis with stacks of 10,000s. I don't think any of them are true. I don't think any of them are real. I think there's a lot of pain out there. I think, if you're an investor, don't look at your, it's funny. I watched a little thing, I'll be quick, of Warren Buffett talking about, investing. And he said, look, if I buy a house, I put it away and I hope that in 20 years it increases in value. If you can't take the volatility, you shouldn't be in the market. Right. But that doesn't mean that if you're new, you shouldn't educate yourself. And as we always go to, a technical analysis is the best defense against this kind of volatility. Right. This is an amazing opportunity for trading. We're even finding, though, that we're cutting our size down and we're putting tighter stops in, because sometimes in this kind of wild market run by headlines, technical analysis does get beat up a little.
Peter Tuckman, the Einstein of Wall Street. Peter, always a pleasure, man. Have a good rest of your day. Thanks for coming on today.
Pleasure.
All right, we got to hop, guys. Live trading with Benzinga is going live, so smash that like button. If you haven't checked out Benzinga Pro, there is a discount code to sign up in the description of this video on YouTube. It's a 25% off code, I believe. Let me double check that. Yes, 25% off code. The link is in the description. Check it out. Also, as we mentioned, bzcannabis.com. Get 30% off your ticket to that event with the code SHOWS30. Thanks to our guests today, Peter and Jason. Thanks to all of you. I'm done. I'm hopping off. Live trading is hopping on. The stream will redirect to those guys. Everyone, good luck today. Stay green. Catch you later.